The raw mineral trade moves $2.5 trillion of physical material every year. As the global energy transition accelerates, demand for critical commodities like copper, cobalt, and rare earths is projected to triple by 2040. Generalized large language models fail when applied to this market. Commodity data is sparse and regime-dependent. When forced to process this environment without strict boundaries, generic models routinely hallucinate, making them unreliable for institutional capital allocation. The DMX AI Intelligence Platform operates on a 10-plane quantitative architecture driven by narrow-purpose AI agents. Each agent executes a single, explicitly defined task within a larger systematic framework. The platform's competitive advantage is its ontological moat. DMX maintains a canonical database mapping every mine, port, smelter, and refinery across the global supply chain. While these physical assets are massive, the data they produce is fragmented. Information arrives as unstructured noise. Regional news reports of smelter outages, complex port congestion notices, and disparate mining company filings. Extracting reliable alpha from this noise requires more than generative reasoning. A rigid, deterministic data structure is the prerequisite to convert physical supply chain chaos into mathematical probability. This system architecture diagram outlines the first half of the intelligence pipeline, where unstructured inputs are normalized into clean records. Agent 1 is the source harvester. Every 15 to 60 minutes, it polls over 30 sources, detecting updates and retrieving raw documents. Agent 2, the document parser, reads these files with strict extraction directives. It identifies specific parameters, event types, dates, and estimated tonnage impacts. Any data falling below a strict confidence threshold is routed to a human review queue. Agent 3 is the entity resolver. It uses fuzzy matching and embeddings to map disparate real-world aliases, recognizing that TFM and Tenke Fungirume are the same facility, and assigns them a single canonical asset ID. This topology chart maps exactly where this normalized data lives, separating volatile processing from durable storage. We distinguish between the volatile context window of the AI models and persistent memory. All cross-session state survives in a Postgres database, acting as the immutable system of record. Tying this together is the OpenClaw orchestration node. It routes tasks, executes automated browser actions, handles failure retries, and maintains a time-stamped, immutable audit log of every agent action. By enforcing this strict ingestion pipeline, the system filters out invalid inputs before reaching the models. Real-world noise is translated into a structured, queryable intelligence graph. This diagram illustrates Agent 4, the signal engine. It computes leading indicators across 5 distinct data families before price movement occurs. The first family is physical tightness. By tracking metrics like exchange inventories, visible warehouse queues, and sudden smelter outages, the engine identifies immediate supply shocks. The second family measures logistics disruption. Variables like port congestion, vessel delays, and regional energy shortages act as friction multipliers, directly delaying supply delivery. The third and fourth families track policy risk, quantifying the threat of export bans and sanctions, and market structure, monitoring contango, backwardation, and nearby spread widening. Finally, the fifth family focuses on demand nowcasts. It measures forward consumption pressure using real-time proxy data like EV production rates, steel output, and grid deployment metrics. The engine processes inputs in stages. Raw data passes through a deterministic rules engine. If inventory drops while spreads tighten and outage severity rises, the system registers an alert. Next is normalization. Surviving alerts are converted into standard Z-scores, measuring current severity against historical baselines. After normalization, the system applies machine learning. Gradient boosting on these structured features predicts short-term forward move probabilities. The precise final output, a composite bullish or bearish probability score for the target mineral, paired with an explicit confidence score based on data density. Because the system weighs 5 separate analytical dimensions, it ignores single-source anomalies. The resulting directional bias is statistically robust and insulated against market noise. Continuous operation of large language models generates massive computational overhead. Executing this volume of inference purely through cloud API calls is economically unviable at scale. DMX utilizes a hybrid, local-first compute architecture. A Mac Mini M4 Pro acts as the central control node, handling scheduling, config management, and human-in-the-loop approvals. The heavy lifting is assigned to Mac Studio AI worker nodes. Equipped with 128 gigabytes of unified memory each, these nodes run complex local LLM inference efficiently, without requiring expensive GPU offloads. This resilience matrix outlines the hybrid infrastructure. While compute happens locally, the durable system of record lives securely in the cloud. The local AI workers are entirely stateless. If hardware fails locally, the system auto-recovers its state from the Postgres cloud database and resumes processing. This topology maximizes the operational efficiency of local machine learning while maintaining the 15-minute recovery time objective required for institutional asset management. This lifecycle flowchart tracks the completed signal directly into market execution. In Stage 4, the decision engine maps the probability score into actionable portfolio allocation. Then, the architecture enforces complete separation between alpha generation and the independent risk management plane. Before any order routes, it must clear real-time compliance checks. The system independently verifies value-at-risk limits, gross leverage constraints, and cross-asset correlation caps. Automated kill switches and throttle engines possess the authority to block, reduce, or halt any trade if drawdown metrics or slippage limits are breached. Only once risk parameters are cleared is the decision pushed to the order management system and smart order router. The smart router splits the execution logic across multiple endpoints, optimizing for cost and latency across commodity futures venues like the LME, COMEX, or digital asset exchanges. Structurally isolating the predictive models from an overriding risk engine ensures that predictive errors are contained before they reach live capital. Returning to the flowchart, execution is not the final step. The system learns from outcomes. Realized profit and loss and transaction cost analysis are continuously looped back into the signal database. This grades accuracy against real market conditions, creating an autonomous pruning mechanism. The system tracks signal hit rates, downweighting variables that fail in live markets, and triggering model retraining when it detects regime shifts. This reporting architecture outlines the final requirement for an institutional operation: transparency. The narrative writer agent translates structured signal data and P&L outcomes into human-readable daily strategy briefs, passing through a mandatory human QA gate before final distribution. DMX operates as a closed-loop, self-correcting intelligence machine. By harvesting data, isolating risk, and analyzing its own outcomes, it compounds its ontological edge and execution precision with every market tick.